It's time now for Smart Charts, where we look at timely topics through the charts. And this week, we're joined by Michael Sheldon of RDM Financial. And Michael, what a week for you to join. Thank you for taking the time. Such a volatile, crazy trading week off of the back of the declines that we saw last week. Do you think that more is likely to come in terms of big moves up or down?
Well, I think there's been a lot of uncertainty over the near term because nobody really knows what to expect from the coronavirus. The question is how much disruption there will be to the economy and to corporate profits. One of the things we did, we looked back at about 12 healthcare scares since 1981. For example, we looked at AIDS, Ebola, we looked at the SARS virus, and what the research indicates is that at least in the 6-month period following a breakout of such an event, the markets have typically traded higher 11 out of 12 times. And looking ahead over the next 12 months, the markets were higher 9 out of 11 times.
So that would seem encouraging. Let's bring into the equation a fundamental picture on consumer confidence. And I guess one point around the coronavirus is it's still unknown to necessarily, although that's pretty compelling, 11 out of 12 times.
Sure. So this is a chart of consumer confidence. It came out earlier this week from the Conference Board. And they basically look at 3,000 families and look at the history of consumer confidence. And I think it's important to look at the consumer because the consumer represents about 2/3 of the overall economy. So job growth has continued to rise, wages are rising at a moderate rate, and household balance sheets are in pretty good shape. All of that is captured in this chart here on consumer confidence. And we think that consumer confidence when it came out this week rose to a 6-month high. Unfortunately, that's somewhat backward looking. We're encouraged by the data, but we think that as news about the as news about the coronavirus spreads, we could see some weakness in this. And I think the volatility in financial markets may also cause somewhat of a pullback in consumer confidence as well near term.
So let's now bring the earnings picture that you were talking about into the equation, because here we have the S&P 500 in blue and forward earnings in white.
Sure. Well, we talked about forward 12-month earnings when I was here back in December. And this chart actually compares, as you said, forward 12-month earnings for the S&P 500 with the S&P 500. And it basically shows that stock prices tend to follow the direction of corporate profits over time. Earlier this year, on December 31st, the estimate for 2020 earnings was 9.4% for the S&P 500. And as we stand as of last week, that number's down to about 7.7%. We think what's happening now is that earnings projections are coming down somewhat as investors sort of anticipate or look ahead to some disruption or some dislocation in the economy over the next few months. How much at this point is still yet to be determined.
So that could certainly perhaps be a drag on the S&P 500. And then finally, let's take a look at the U.S. versus the rest of the world.
Sure.
And that will be right here.
Okay. So what's interesting about this is a long-term chart going back to 1990, and it shows the S&P 500 versus the MSCI All-Country World Index, excluding the U.S. And what you can see is that this chart tends to trend over a number of years. From about 2009 to the present, U.S. markets have outperformed foreign markets. And that's because U.S. markets, the U.S. economy has been stronger, our monetary policy has been more proactive, corporate profit growth has been stronger. However, that's not always going to be the case. So at RDM, for example, we've been overweighted in the U.S. markets versus the foreign markets. But at some point, these trends will change in the future.
Yeah, well, you've done very well overweighting the U.S. versus the rest of the world, but it does appear that perhaps that trend could change. Parabolic in nature and some cautionary fundamentals and market signals to keep in mind.